Welcome back. There's 20 minutes to go for the pre-open session. And Jayakumar is now with us, Group CEO and Managing Director at Prime Securities. Jakes, good morning. Good to have you with us here on the program. You know, the last time we spoke, you were very confident that to get a deal with US done is going to be straightforward. And you kind of sort of presented that calculation about how we could knock off the trade deficit with the US by buying from the US, some of the stuff that we have to buy anyway. And I think all the confirmation which is coming in from Trump downwards in the administration seems to suggest that we are first in line to get a deal. So bang on there. We'll come to that in a bit, but let's just start with an individual situation which I think is top of mind for viewers today. IndusInd Bank, Jakes. What is your sense? I mean, trouble at the bank with the derivatives portfolio. Now we are seeing top leaders leaving, a committee being appointed. Your thoughts on the stock?
Good morning, and thanks for having me over. As far as IndusInd is concerned, I actually believe that like markets discount bad news ahead of time, this is actually the beginning of the resolution process in a sense. This is not, this is not something to be viewed, separately from what's already been happening. The change of guard or the change of leadership was a matter of time, and it's happening. In fact, if anything, clarity will emerge going forward. And my own assessment is the beginning of the end of the troubles in that sense is the way I'd look at IndusInd Bank.
But Jakes, you won't see this leadership vacuum as becoming a bit of a concern at a time when banks will be sort of powering ahead with rate cuts, etc., moving on the growth pedal. Basically, is there downside to the stock? Because now suddenly this is a new situation. The fact that he was going to leave was always known. But now that there is a sudden vacuum because of this?
Vacuum may not be for long. I mean, I'm fairly sure that the management board and RBI included would not have been sort of sitting back and waiting for this to happen before starting a search. My own assessment is that the search is probably already underway and probably close to coming to an end. Wouldn't surprise me to see a new person at the helm being announced pretty quickly.
All right. Hi, Jakes. Morning. Good to see you in. And I think RBL Bank is another stock that you've been tracking closely. Is the worst behind for them?
Don't like to talk stock specific in that sense, but yes, I have been pretty public in my pronouncement of the same. They've been ahead of the curve on a whole bunch of things, including provisioning, etc. And I think the management commentary post results were very heartening. And that apart, the disclosure that I would have a vested interest, as would Prime, and in terms of investments and other mandates, but to put it simply, I think the worst is well behind.
Okay, all right. Jakes, in the past, you've got the timing on a couple of Ferris names as well, very correct. Now you have a special situation that's playing out on Vedanta, and that's something that you have liked. Besides what's happening on the globe, actually the stock appears very, very well placed. Even if you take into account what Mr. Agarwal does next is anyone's guess, but this demerger seems like a value unlocking proposition. What's your take?
To put it very simply, yes, it is value unlocking. Equally, a lot of institutional investors will actually find the split pieces, 3, 4, 5 companies as the case might be, too small to hold. So like ITC Hotels got sort of, in a sense, sold off by people who found that the value of that particular piece was much smaller than what their portfolio would permit. So you could have a technical situation post in terms of institutional investors, but you could have a great situation in terms of individual and HNIs who would find the individual pieces far more value accretive than an agglomerated whole, as is the case as of today.
Got that. Jakes, so 2 questions. One, apart from individual stocks or areas that we've discussed, where else are you finding, where else can one take positional calls from here? And second, we've seen foreigners coming back. What's the feedback that you are getting? Because it seems to be a step change, very different from what they've been doing for the last several months. And the problem, though, is very quickly the market gets into, people start complaining about valuations once again because earnings growth is still anemic. So your thoughts on these two?
My resolution and also the mandate from you was to keep the answers short. Shorter than the length of the questions.
That's a nice one, Jakes, but go on.
It's clear the foreigners are coming back big time.
Yeah.
B, we did talk about the end of American exceptionalism, if you will, or at least a shift from America to the rest of the world, where the dollar index is the leading indicator of what's happening. So if you want to look at something, forget looking at the stock markets in the US, look at the dollar index, and I think that's telling you where the money flow is. And it's well and truly below 100, in fact, straddling 99 as we speak. Number three, for the first time, you have a confluence of three factors. Locals continuing to buy, which means that the flows into the local institutions is continuing, and a lot of people who are sitting on the sidelines in terms of funds with larger allocations of cash are redeploying that. This confluencing with foreigners coming back and the heightened panic or the heightened nervousness there is amongst HNIs and individuals. I've never seen a confluence of these three, foreign and local flows, plus individuals and HNIs actually fearing war and so on and so forth, and portfolios having gotten lightened over a period of the last few weeks. And all this points to a much higher markets in the weeks to come.
Okay, sounding good. When flows are in, then all bets and all arguments pretty much fail. Finally, Jakes, PSUs and specifically defense stocks, they told us when we were going through this 5-month correction that the new bull market will have new leaders, etc. But look what's happening. I mean, Mascot Dock in blue sky territory, many of these stocks barely off their 52-week highs now. What would you advise here?
I think the issue with PSUs has been order execution, at least in the spaces that you mentioned. So that will continue. Simply because there's a greater threat of war doesn't mean that something has changed overnight. Some of these things take time for orders to come and orders to get executed. So I think that continues. Most of them had good order books in any case, and spending on defense was already on the rise even before this particular set of events in recent times. So keeping that in mind, I think the PSUs are still a bottoms-up story. You need to go into individual spaces, not sectors as a whole. But I also think the government will use the next 12 to 18 months to actually divest their stakes and get divestment targets going in a lot of the PSUs.
Okay.
Got that. By the way, the last point, I just wanted to clarify, Jakes, you said, so institutions, both local and foreign, are buying, but you're saying amongst HNIs, there is a bit of a panic. The need to get in, that panic, or are they worried about this escalation at the border?
I think there's a lot of worry. I think a lot of talk in recent times that I've heard about preservation of capital, uncertainties in the world, paradigms have shifted. We can't expect things to happen when the world's number one person is sitting on $400 billion of cash. Who are we to make a call on the markets? So this kind of conversation has been on. And more recently, of course, the war and the attendant fears around the war. So for the first time, macro issues are dominating micro investing. And I think that's a good call if, large sections of the audience are worried. And you have foreign investors with allocations coming through. For the first time, I may say, many quarters. I think it's a sign that, we are where 21,900, 22,000 got defended. Maybe 23.5 to 24 has become the new 21,900, 22,000.
There you go. You left us with some sort of a, price understanding of these issues as well. So perhaps 24,000 is the new base for the market. Very helpful conversation, Jakes, this morning.
Surabhi,
Thank
I just wanted to say that, Jakes, all the best for the conference tomorrow, the Springboard Conference. This is, I'm looking at the schedule, a pretty interesting one. And of course, we are partners, CNBC-TV18 are partners as well. So pretty good lineup of guests, etc. So wish you all the best of luck. And I hope this is the first of many that we are.
Thank you. And, delighted to have CNBC as partners. In fact, I may add the best in class in that sense from a media perspective and from a venue perspective that the Indian Hotels is also part, is the venue for this. So quite looking forward to this and hoping to make this an annual startup convention.
All right. Absolutely. Thank you very much, Jakes, and good luck with that particular conference.
Thank you.
The Gift Nifty